we're not concerned. Everyone realizes they are going to raise rates. It's not going to be a big surprise or a shock to the market. So you may have a, a 2-week or a 3-week sell-off on the news, but we would use that as an opportunity. The key that we think is that an interest rate raise means the economy's good and things are really progressing, and that's encouraging. And I think that over the long term, that's going to be a good entry point for getting in high quality stocks.
Yeah, but a lot of people out there say that the steepening yield curve in the United States may not necessarily be good news for the overall economy. I mean, the narrative is we hope that the investment communities take it as a piece of good news that the economy is strengthening. And when it does, you tend to see a steepening yield curve.
Yeah, you do. But one thing, they're not going to continue to raise rates. It's pretty much going to happen. You're going to get the first raise. But you will have to see continued strong economic data for that to continue. And, it may be a one and done for a while. And then as you get more data points that things are progressing, that's when you get more. So it'll be a check and balance. But, we don't really focus on that. We know that it's coming. We know that we've got to do our fundamental stock research and find good high-quality companies that are able to grow at above market rates that are trading at low multiples, and they're out there.
And I presume with the short-term interest rates rising in the United States, or potentially at least at the back end of this year, that's going to throw out quite a bit of opportunities for companies like yourself, or fund managers like you, in the small cap space. Talk to us about some of those opportunities, Craig.
Yeah, there are. It's interesting. Last year, if 2014, the market ended up, 10%, let's say. But there were 3 big sell-offs during the year. There was I guess a 5% or so sell-off in February, a 7% sell-off in May, and then about a 10% sell-off in October. And then the market ended up 10 for the year. So this year's been a little unusual. We have not had those opportunities and sell-offs. And who knows, the raising rates may be the chance for the market to kind of test itself. And if that were to happen and we got a 5 or a 7% correction, small caps look good. There's a lot of companies like some of the airlines, not all of them are small cap, but we love the airlines. They're trading about 4 and 5 times earnings. Companies like Trinity Industries, that are the rail car manufacturer, trading less than 10 times earnings, but growing at a much faster clip than that. And there's a lot of energy stocks that have been hit hard since the commodities come down pretty significantly, but you're starting to see a better environment, and you're starting to see kind of the good companies that are able to make money even at a $60 oil price. And so in the small cap space, there's a lot of opportunities, and a sell-off would get us real excited about going in and buying those.
All right, so you've got to be bottom-up pickers in this sort of market, given the economic environment, and of course the environment with the Fed increasing these interest rates. But Craig, these 3 specific sectors that you outlined for us on the program today, are they predicated on the fact that they're looking at like attractive valuations, or are these potential growth stories in the context of a raising rate environment?
They're both. The market we are close to new highs, and there are segments of the market that are expensive. You could say the biotech and some of the medical stocks, and some of the restaurants look like they're a little pricey. I guess social media is another area, but there's like industrial companies and airlines and a lot of industries that we're seeing superior growth rates where you're able to buy kind of at a PE multiple of their growth rate, and that's unusual. In my 30 years, I haven't seen too many times when you can buy a stock that's growing 15 to 20% and pay 15 times earnings. And so there are a lot of those names, especially in the smaller industrial names. Some of the paper companies and some of the cement companies, steel. Some of the steel companies are starting to show a little bit of growth. And then I've already mentioned some of the industries like railroads. And most of these things, these industries have one thing in common, and there's very high barriers of entry. They're not easily duplicated. There's not much competition. And I think that's the difference going forward, is to find industries with high barriers to entry and good pricing power.